Pensioners of the world unite and move to Italy. Yes, because since 2019, the Italian government introduced a new flat tax for pensioners moving into qualified municipality. So first of all, in order to qualify, you need to receive a private or public pension benefit. And this is based on your foreign country laws. It doesn't matter your citizenship, it matters that you have a foreign pension and you're benefiting of that with monthly or annually payments. Now, this is the first thing you have to do. The second thing you have to do is to move your tax residence in Italy from 2019 on. If you moved earlier, you cannot qualify for that. And you need also to move your tax residency into a qualified municipality. So the qualified municipality is located in the south from Abruzzo down south, and it must have less than 20,000 inhabitants. So for instance, if you move to Naples, to Palermo, that doesn't work. But if you move in rural areas, as long as they have 20,000 inhabitants or less, you're good to go. Now, what is the tax advantage? The tax advantage is that you can get a flat 7% tax rate on every foreign sourced income. It is not just on your pension, it's on every foreign sourced income. Rental income, dividends, capital gains, other employments, business activities, etc. Whatever you make abroad outside Italy, you pay 7% flat, and that's it. And in fact, in the tax return, you have to disclose two numbers. The first one is your pension benefit. The second one is any other source of income. Now, there's also a cons. Because this is a substitute tax, it's flat substitute tax, which means that you cannot offset any withholding tax paid abroad as well as any foreign tax credit. Those are just wasted. So imagine that you get an income of 100 and get taxed of 20 abroad. Well, you should pay an extra 7% to Italy because you cannot offset that. So how do you do that? Well, there is also a possibility to cherry pick income sources. In fact, you can just say, hey, I'll take these income sources and tax it at regular Italian tax rate. So you do not waste any withholding tax, any foreign tax credit. I can claim any tax deductible items and I do not waste any possible tax, which can also be a strategy, and you can offset and balance different sources of income to maximize the overall tax liability you pay. And finally, there is a further advantage. In fact, you are not required to disclose any foreign held assets. So you're not required to disclose your bank accounts, your real estate properties, any investment portfolio, pension fund, anything. And on top of that, you do not pay any wealth tax. And finally, this regime lasts up to 5 years. So you have a maximum 5 tax return you can exploit this tax regime. However, you can decide to interrupt it at any time. And finally, you must also think about the double tax treaty because there might be some income sources that are not taxable at all in Italy.